Special market voice, Nischal Maheshwari, CEO of Institutional Equities at Centrum Broking, joins us right now on the show. Nischal, good having you. Thanks much for joining in. Good morning. I'm wondering if, as a business house, when you're pitching India currently, in the current context, to investors both globally and locally, people are finding resistance because when we speak to a bunch of your global peers, they all say that the ASEAN nations other than India are better off being bought right now. Is the institutional flow a bit slow in the current scenario, or is it showing signs of picking up?
So as yet, basically, I think we have seen only in the last 10 days that the FI flows have started becoming positive. And historically, my experience has been it is largely to do with the dollar trade. And dollar trade seems to have reversed basically, and people are taking more risk, and that's why we're seeing that emerging market flows across the all emerging markets have been positive, and we are receiving our share. Our share may have gone down a bit basically because we have still got this kind of uncertainty and domestically, and that's why we are only receiving money in the top 15-20 kind of stocks. So a lot of ETF money is coming into the country. But I think, are we getting our share? I think somewhat lower, but we are getting our share of money from the FIs.
Is it easy to find a case for being bullish at the current valuations out here in India? And if so, what are the pockets that could drive growth? Because the standout point, Nischal, in the last 20 days is that the non-polarized space is now starting to move up. We're seeing PSUs do that. We're seeing metals, pharma, etc. All of them finding traction. Is that the space that you believe people will now hunt for bargains?
I think it is still too early to look out for bargains in this market. I think one should play a bit more safer, look for more value in the market, and wait for a clear or maybe some early signs of green shoots. I do not see any green shoots on the ground as yet. So it's too early for trying and doing more bargain hunting, especially on the mid-cap side. But having said that, I think valuations on some certain parameters started coming good basically, whether if you look at it. Now it's a long-term average where they have come to. So GDP to market cap to GDP, that is now a 10-year average. Dividend yield is a 10-year average. So a lot of these factors, price to book is a 10-year average. So you are now coming to your averages. You are not cheap, but you are now coming to your 10-year averages. Even Nifty, if you look at it, ex FMCG, now FMCG has around 12% weight out there. So if you look at ex FMCG, you can shave away around, if not more than at least 3 PE. So around 18 may become 15, which is a long-term average. So that is the way the valuations are at the moment.
Any themes that were underplayed up until now, and the only one that primarily comes to mind is the PSU theme. Does that start playing out now, Nischal?
So I think there has been this divestment which the government is proposing, and market is getting excited about it. But there will be a lot of challenges on the way basically for divestment, and you have to understand each of these companies has been there on the market several times, and we've still not found buyers. You look at the case of HPCL, it is no different from what BPCL was. Or BPCL is basically, and we didn't find a buyer at that point of time, and also basically, and finally ONGC had to buy it. So all this excitement about government divestment, I'm not very convinced about it, because you have to really find value basically, because with these kind of debt levels, this kind of number of employees, it's going to be very difficult for any international company to come out and find value in these companies.
Okay. All right. So it's almost as on a case-to-case basis. The consumption engine, which has been sputtering up until now, Nischal, we've been talking a whole lot about how and when we would rather see the demand picking up. The numbers in Q2, some of the companies actually, showcase decent enough volume growth numbers. Do you see that this as a slight sign of a pickup that's coming back into the system and that could spur about this growth engine in consumption?
So consumption also, I think the story has been not up to the mark in the second quarter. I think especially autos seems to be more one-off, which was a pent-up demand, and you had a festival season around it. So a lot of that got spent. The dealer surveys or anything else basically doesn't give me any information that the repeat is happening what people saw at the festival time. So I think yet to see a more sustained recovery. The worry still remains to be that the rural is still not picked up after a good monsoon. That is what the worry remains to be. And when we speak to dealers, when we speak to rural, the problem still remains to be the liquidity front. That's where most of the guys are stuck, that the wholesaler level basically there is no liquidity or low liquidity basically, and that's where they are not able to take that risk, or they are not able to sustain the trade. So somewhere I think we need to actually, to get the demand back, we need to actually address this liquidity issue basically down the line at the wholesaler and the dealer level.
All right, and that's actually a very prudent point, because yesterday, we spoke to Vinkesh Gulati of FADA, and he also pointed out that October as a month was good, because probably better than the previous months, because of the massive discounts that were given out on the pretext of the festive seasons, which may not actually follow through in November and December as well. The other theme that is now suddenly becoming, a darling of investors has been this whole non-lending financial theme, which has been insurance, even asset management companies, which have shown growth, and the visibility is there. Talks of underpenetration, big story lined up ahead in terms of future growth, and therefore the valuation premium for some of these names. Do you believe this is the story to go by?
Yes, both these stories we have been quite positive basically, and we still believe that there is a long runway for both of them, given that both of them is hugely underpenetrated spaces. Whether it is insurance basically, where the penetration is around 10-11%, and equities, I think the penetration is as low as 2 or 3%. So I think there is a long way basically for both these spaces. Easily for the next 10 years, a 10-12%, a 10 to 15% kind of a growth can happen for both these spaces. Yes. Who will be the winners is a different case altogether, but the space as both these spaces can continue to grow between 10 to 15% for the next 5 to 10 years at least.
Nischal, somebody made a very interesting point yesterday in one of the meetings, that what SEBI did to capital markets and institutional broking and the growth of the large organized players over a 10-15 year period, RERA could do that to real estate. Maybe too far-fetched, maybe too long-term, but I wonder if you guys at Centrum have a long-term bullish scenario on any of the listed real estate plays, and do you believe that these now give you an opportunity at a very nascent stage to go out and invest and try and create wealth over the long term?
See, I agree basically that given that the competition has gone down and there are few players which are surviving, which have strong balance sheets, those are the plays to be made. The only issue still remains to be basically where the demand is going to come from. That is the major thing basically, because there you don't see any respite, whether it is in terms of the small, so affordable housing is only what seems to be still clicking away. But anything plus 1 crore, I think still there is huge issue basically as far as demand is concerned. The second thing remains to be is a lot of people are stuck in their first homes, so that litigated houses all over the country basically doesn't leave you a very good taste. People have booked houses 10 years back and still not got delivery. So I think that that memory also has to fade away slowly for people to once again become confident. And again, you're saying basically the yield on the rental yields on housing is as low as 2.5-3%. So it doesn't make sense for you to go out and buy a house.
Yeah. Yeah, well, it doesn't, but maybe the volumes game and not maybe the pricing game could come into place at some point of time. But okay, your point is well taken, Nischal. In which case, let me just ask you, I know you answered my question saying that it's not the right time to bargain hunt right now. So in a scenario like that, where is it, Nischal, that you, or what is that pocket or the theme that you individually or as a unit are the most bullish on currently?
So we continue to believe that banking as a space still has got a good way to go. We are getting, so after this NCLT issue which has got sorted out, I think a lot of problems will get sorted out. Now only for the banking space, I still don't know basically what is the answer there to the NBFC space, because banks are still not ready to lend to the NBFC sector. So that is one space basically. So if you look at it, insurance, AMCs, banking, within banking, more corporate banking than the retail. Those are the spaces which we are becoming positive on. Autos also as a space, basically we are saying go out and do a bit of bargain hunting for value. So two-wheelers is a space basically which we like out there. I think Maruti on dips, one should look at it. The other space which we like is oil and gas. Much more steady, basically the gas part of it, if you really look at it. So I'm saying consumption everywhere is what the driving theme is still. And then consumption, you have to be a bit more choosy about what you want to really look at, because within consumption, if you are able to find value like in auto, then I think that's where you want to be in.